Good day, guys. Welcome to today's academy. And we are still on the topic accounting for non-current assets. But this time around, we are dealing with depreciation. So now, what do you think depreciation is? Depreciation is the continuous and permanent reduction in the value of an asset. So that's just the way I'm going to put it. It's the continuous and permanent reduction in the what? In the value of an asset. So in other words, what can I also say depreciation is? For depreciation is like now when I say a non-current asset, I said it is capital in nature in our previous class. So how do we express or record that capital expenditure in our book of accounts is depreciation is a way of what allocating a portion of the asset that is used for that period or for that year. For example, an asset is meant to last for 5 years. So instead of now we cannot impute the total amount of the asset at once in our statement of profit or loss. So what do? We look for a way to expense it. And how do we expense it is through what? Depreciation. You understand? So what are the possible causes of depreciation? What could make an asset to depreciate? Number one is what? Okay, let's call these causes. Number one is what? Physical what? Deterioration. Physical deterioration. Now we have obsolescence. It's no longer obsolescence. It is when you say obsolescence, you say something is out of date. You understand? You cannot make use of it because it's no more. How will I put it? I don't say it's no more trending. It's not what the firm or the industry is making use of now. You understand? Another thing is what? Inadequacy. Similar to obsolescence, but in the sense that it can't meet up with the tax at hand anymore. You understand? So that's what they mean by what? Inadequacy. Then we also have depletion. Now sometimes we have what called passage of time, which I would still say is synonymous to what? Inadequacy. You understand? So there are other various possible causes of what? We can also add wear and tear to it as well. I feel wear and tear is talking about physical deterioration. You understand? So you need to understand these causes of what? Depreciation. Now, how do we depreciate? What are the methods of depreciating? Now we have various methods of depreciating an asset. Methods. Methods of depreciating an asset. But before I go into that, now what are the items that will help us determine the method of depreciation? Now we have the cost of the asset is very, very necessary. That is the amount or the purchase consideration that we pay to get the asset. We have treated this in the past in previous video. Then we have our estimated value. Okay, let me use this. I'll still clean it. What we call estimated value. So this is the value at the end of the useful life. So what value are you going to get, or what value will remain at the end of the useful life of the asset is called estimated value. Now another name for estimated value is what? Scrap value. Or you can have salvage value. So these are the other possible names that you can call what? Estimated value. Estimated value, scrap value, and what? Salvage value. Then another item is the useful life. You understand? So I explained that when I was giving the definition of depreciation. That is the number of years that your capital expenditure, that is the asset in which you get, is going to last. So that's the work of depreciation. So you share that amount into what? Into each year, into various years. So that depreciation is like you are expensing your what? Non-current asset to your what? To your statement of profit or loss, so that your financial statements can be presented what? Freely, truly and fairly. Now back to the method of what? Depreciation. So the number one common one is what? is our straight line method. Straight line method. Now another name for straight line method is what? They call it what? Equal installment. Now they can call it also, or can also call it what? Fixed installment. It is fixed in the sense that the amount that you depreciate for the useful life, you understand, the depreciable amount for the useful life of the asset is the same throughout all the years. Are you getting me? We will solve a question for it and you get to understand what they mean. So our depreciation amount under straight line method is what? Now it is in two ways. They either give you the percentage of what you depreciating it. Now if they did not give you the percentage, then you get your depreciable amount yourself. That's our cost minus what? Scrap what? Value over what? Number of what? Useful life. That's how you get our depreciable amount or depreciation amount that will be charged to your profit or loss. You understand? Now the next one is what we call reducing balance method. Reducing balance. The keyword reducing. Another name for reducing, if something is reducing, then you can say it is what? Diminishing. Diminishing balance method. So in this case, the amount that will be charged, this will also be given in percentage. The amount that will be charged for each year in your statement of profit or loss will be reducing. That is, the depreciation amount for year one or for the first year will not be the depreciable amount for the second year. You understand? The value of the depreciation will be dropping. Good. Now if the percentage is not given, then you can get your depreciation by what? Getting the nth root. Nth root of what? Scrap value over what? Over our cost. Where n is representing the number of useful life, then our scrap value over our cost will give us what? The percentage. This will help us to get what? The percentage of our depreciation. You get? Now 3, we have what we call so okay, let's talk about sum of the year digits. Sum of the year digit. So sum of the year digit is you summing up the consecutive numbers of years that you will be what? That the asset is going to last for, then reversing it by, for example, let's say they give us year 1 to 5. So 1, 2, 3, 4, 5. It's like attaching the area of importance or how efficient the asset will be at the beginning to the end. You understand? So if you sum this up, this is 3, this is 15. So for year 1, the depreciation amount will be what? 1 over what? 15 times your cost. Now remember, if there is salvage value, you have to deduct your salvage value or your scrap value from your cost before you get your what? Your depreciation amount. You understand? Regardless of straight line or reducing balance and whatever method they are going to make use of. Now this might not be very clear now because we are still on the theoretical aspect. Once we get to the practical aspect, you understand what I'm saying. So this will be what? 2 over what? 15. Now in some cases they can even reverse it by saying 5 over 15 at the top, 4 over 15 at the second and the likes. But when we get there, you understand what I'm talking about. Now another method, remember my goal here is to give you the method possible methods that you are going to ask you. And beside, what you guys are doing is what basic. So I don't want to go too deep in this. I'm going to go deep eventually, but for the scope of this class, we'll just touch the surface. Now we deal with revaluation method. Revaluation method. Now this one is more of like a fair value. So you check the value of the asset at the end of the period, then you compare it with the what carrying value or the net book value at the period. Now we have what unit of output method. Unit of output method. Depending on the now your assets will be depreciated based on the quantity of the what output that your machine or whatever you are using is able to what produce. Now next we have depletion of units. Then we also have what annuity method. Now we see that now out of all these seven formulas, straight line, reducing balance, sum of the digits, and revaluation is very okay. Now there's many one. There's also machine hour method. Out of all these, about four is very rampant and is what is being tested the most at your level. You understand? So we see that we treat straight line, reducing balance, sum of the year digits, and probably revaluation method for the sake of your exam. You understand? So this is where I'm going to be stopping for today. So if you have any question, you can ask. Now, I want to give you an assignment. You go and make your research on what your unit of account, depletion of unit, annuity and machine hour. Then you give me your answer in the comment section and I'll attend to it. So this is where we'll be stopping for today. Kindly like, subscribe, turn on the notification bell so that you can get notified when we upload our new video. See you in our next class. Thank you.